Hi you guys, welcome back to the channel. My name is Brad, this is Firefighter's Financial Toolbox. Is 2021 going to be the year that we have out of control inflation? Now the reason I got the idea for this video is I got two different emails 2 days in a row from my Ally Invest account. Let me read the first email to you. Market angst is back and it's time. It's because of inflation and yields. S&P 500 fell as much as 2.4% during the day today after Fed Reserve Chair Jerome Powell said that higher inflation may be coming and reiterated that the Fed will likely keep rates low for a while. Powell's comments were a jolt to investors consumed by the thought of runaway inflation. The S&P 500 dropped below its 50-day moving average, a sign that the selling may not be over. At the same time, 10-year Treasury yields climbed to 1.55%. the highest level in a year. What's going on? There's a growing worry that the economy may be running away from the Fed. While the thought of rapid change could be enough to scare investors now, we see higher inflation as a long-term positive for the market. We're still seeing historically low levels of inflation, so it would take a lot of change for inflation to get out of control. If you're worried about inflation, there are ways you can protect your portfolio. Rising yields could also be a good sign in this context. Yields tend to rise early on bull markets and economic recoveries because the outlook is improving. Still, we understand that change can be nerve-wracking, and higher yields tend to hit high flyers harder. That's why we've seen stocks like Tesla and Peloton fall more than 30% this year. Keep calm for now. We don't think this drop is the beginning of something bigger, especially considering the strong trends in earnings and the economy. This may just be a healthy step back for a market that's rallied strongly since November. If you stayed out of the market because stocks looked expensive, now may be a good time to pick some up at a discount. So, is inflation going to happen? I don't know. But let's take a look at the second email I got, also from Ally Invest. This one reads, low yields, high anxiety, the market reacts to inflation fears. The U.S. economy is back in growth mode, but investors now fear that rising inflation may just be around the corner. We don't expect inflation to rise to worrisome levels though. Here's why. Now they've got some points. The inflation situation. Fed Chair Jerome Powell comments on Thursday reiterating a commitment to keep rates as low as he can were a jolt to investors who were worried about inflation. And it's true that low rates and ramped up demand could lead to price increases that overpower incomes. But core personal consumption expenditures, the Fed's key barometer for consumer prices, grew just 1.5% in January. And many parts of the economy, like the job market, are still healing. We believe it all points to any inflation spike being temporary if it happens at all. The yield tantrum. The 10-year yields jumped last month and has compounded runaway inflation worries. But rising yields have gotten a bad rap and they could foreshadow a healthy economy recovery. The trend in yields also makes a lot of sense when you compare it to other economic recoveries. Yields tend to rise as the improving outlook on the economy entices investors out of conservative assets like bonds. Today's stock market could be following the same playbook. Finding the opportunities. Change can be nerve-wracking and the market is always adjusting. Keep calm for now. We don't think this drop is the beginning of something bigger, especially considering strong trends in earnings and the economy. And if you're looking for opportunity, we encourage you to check out sectors that do well early in economic recoveries. Coincidentally, these are also sectors that have been left behind for most of the rebound. Okay, you guys, so there's two emails on 2 consecutive days from Ally trying to calm investors' worries about inflation. Now, as you guys know, the 10-year Treasury yield has gone up, and that's got people concerned that inflation is going to run away. We have had inflation in certain markets. If you look at lumber prices, for example, during COVID, when a lot of things got turned down, people went to Home Depot and decided to do home projects, and lumber prices skyrocketed. Precious metals prices have gone up dramatically. Even oil, which was tanking early last year, has come back. And the price of gas we've seen has gone up faster than the 1.5% they quoted in January. Yes, there are parts and sectors of our economy where inflation has grown, but who knows how much it will grow and how much it's going to affect. So what can we do as investors with this situation? You guys, we can do exactly what we do all the rest of the time. If you have money to invest, you invest it. Always keep an emergency fund, because when inflation gets worse, things get more expensive, it's good to have a little bit of cash to fall back onto if something happens, like a layoff or job loss or whatnot, or even an emergency, right? But you guys, if you have a 401k or a workplace plan that you already contribute to, just keep putting the money in. Don't worry about these little up and downs in the market. Yes, recently there's been a lot more volatility, and it's been up and down. One day it's been down for about a week, but it's only down less than 10%. You guys, this isn't even an actual market correction yet. You know, our portfolios may have dropped 3 and 4%, but that's just a drop in the bucket. So hold on, don't despair, don't get worried, don't stress about inflation. It's something that happens, and nobody wants to see inflation get out of control. But as far as an investor's outlook, just keep doing what you're doing, you guys. I hope you got something out of this. If you did, do me a favor, drop me that like. It really helps the algorithm, gets my videos out to more people. If you're not already subscribed, you guys, do me a favor, hit that red button, ring the bell, you'll get notified every time I make a new video. All right, we'll see you. Thanks.